And before we even got on here, Ian and I have been talking a little bit about this insane, there's no way inflation's ever coming back environment. And really, it's like inflation is always under the surface. It's been under the surface this whole time. We've kind of stuck to that view the whole time while everybody's been like, well, I don't know. And like that, to me, it's very simple to see when everybody's kind of betting against you and you can kind of see it in the price action. That's a good time for you to kind of go stick to your guns, get long those things, and get ready for a possible ride. So
I don't care how good you are in anything, you don't have discipline, you ain't nobody.
right.
You're nothing without discipline. Because you give up on the slightest struggle without discipline. Discipline is doing what you hate to do, but do it like you love it.
Hey guys, we have brought back Ian. So Ian Culley has been with us. He is from All Star Charts, one of my good buddies. We talk markets all the time, and something that we can talk about today. Perfect person to have on here today with the commodities story starting to take off all over again. So how are you doing today, Ian?
Oh man, I'm doing well. Thanks for having me, man.
I see you brought a bunch of charts. We're
Yes.
gonna hop through these. We've got a bunch of stuff going on, and before we even got on here, Ian and I have been talking a little bit about this insane. There's no way inflation's ever coming back environment, and really, it's like inflation is always under the surface. It's been under the surface this whole time. We've kind of stuck to that view the whole time while everybody's been like, well, I don't know. And like that, to me, it's very simple to see when everybody's kind of betting against you and you can kind of see it in the price action. That's a good time for you to kind of go stick to your guns, get long those things, and get ready for a possible ride. So we'll hop into these slides that Ian brought here. There's a bunch of good stuff, and I'm glad you brought these slides, Ian. This is gonna be a lot of fun.
Yeah, it's one of the things I really appreciate about your research is that you have stuck to your guns in terms of the rising rate environment and the potential for the reacceleration or the risk of reacceleration that's just bubbling underneath the surface right now.
Dude, it's right there, and like once again, like this chart really says a lot here. Live cattle futures. So when you talk to people about cattle, most people have no idea what you're talking about. You can
Yeah.
buy cattle. You can buy. I had somebody say, "Wait, you can buy cows on the market? Like that doesn't make sense. That's evil." And it's like, no, 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 no. It's just like crops, like corn and so on. These products were created for farmers to hedge their own products.
Hmm.
So when we're looking at cattle, the thing I think has been incredibly interesting is the fact that nobody cares about it at all. Nobody talks about cattle. However, it has been one of the smoothest trades for a long time. It has been just moving up. It has been a solid mover. It has made a lot of money, especially in the last few years, when all the rest of the commodities went flat. But that's also something important to remember is that corn and soybean meal is what feed cattle and hogs.
Hmm.
So these things tend to go down as cattle and hog prices move up. As you see, cattle has gone crazy. Hog prices are finally catching up too. This could be an interesting part of the cycle because I don't know if we're going to just continue to see this move up forever, but at some point, this correlation will start to shift. So
Hmm.
basically, there's entire funds, and that's the one thing people never talk about. There's entire funds out there that are literally just made to invest in things like cattle and corn, meaning they short corn and they be long cattle right now. And when the correlation changes, they do the opposite because that correlation is almost like predictable. It's one of the only intermarket analysis relationships that's incredibly predictable because of the fundamentals behind it. So what
They're
do you see at
killing
the
it right
start?
now.
Yep.
They're absolutely killing it right now. The way cattle's moving, corn recently hit
Mm-hmm.
a fresh 3 year low. Um,
Spreads
yeah,
straight
what a
down.
trade.
So look at this, the yield on it though. That's the thing I'll let you explain. So what's going on here between the relationship between the cattle futures and the yields in the 30-year yield?
I've got a lot of questions about that. Like why cattle futures and the 30-year yield? And to be honest, I don't know. we're in a rising rate environment. We're in an environment where commodities have been outperforming bonds, and commodities have just been doing well. If you only look at crude oil, or if you only look at gold or copper, you miss the big picture. And over the past 3 or 4 years, there have been pockets of strength underneath the surface in the commodity space. And it's just kind of been moving around. Like you said, live cattle since the 2020 bottom has probably been the smoothest uptrend. And it hit a new all-time high last year. And
Yeah.
that's another thing. When we look at this rising rate environment, we talk about commodities in a bull run. Not a lot of people are looking to cocoa futures hitting a new all-time high, which they recently did, or live cattle hitting a new all-time high. But there have been plenty of new all-time highs over the past couple of years, and I think there'll be more in the coming years as long as we remain in this environment and rates continue to rise.
No, I agree. And I think that's the thing about correlation. Sometimes you don't really have to understand. Like so many people will get bogged down in like, I need to get it. Like I need to get it completely. And it's like, well, what are the basics? Let's always go back to the basics. Yields run with inflation and growth.
Mm-hmm.
If growth is moving up, usually yields move up. If inflation is moving up, yields can move up. In this type of environment right now, both are kind of starting to move up. Growth is starting to bottom. Not talking about growth stocks. I'm talking about growth as in ISM, PMI
Yeah.
measurements.
Yeah. Economic growth.
Yep,
Yeah.
economic growth. So if we're looking at those type of measurements, we're seeing those start to bottom out. Those start to move higher. Cattle also following, inflation follows. That's simple. That's simple to just understand it that way. You don't have to understand it any deeper than that. Some people will be out there and they'll be like, I gotta get it. And it's like the price is just telling you enough. Like,
Yeah.
like
Yeah.
it's telling you right now that inflation is still moving higher with these cattle prices. And so I really see that, as people are writing off all these commodities right now, and they're going, oh my God, the commodities, they're dead. There's no more. Yeah, I can't believe you guys still have this thesis where you're talking about commodities. It's like half of them are moving up to all-time highs. Of course, I have a thesis where commodities are moving higher. Like also when you look at things like when you look at the overall indexes and you're looking at the CRB index, of course, there's a scenario in the CRB index that people aren't really taking into account when they're saying commodities are going lower. It's heavily weighted in energy. It's
Oh,
more weighted in ags than things like cocoa is barely a weighting in there.
yeah.
It's barely a weighting in there. And then if you have something like, cotton, it's barely a weighting in there. But the ags are a heavier weighting in there. So once again, of course, we're seeing the correlations that we're seeing in things like this, but also, of course, we're seeing the commodity indexes move lower because the way they're weighted. That doesn't mean all commodities are going down. Also, all very important to understand. So getting to the next one. So crude oil versus gold.
Yeah.
I
So this is
always like this one. I always like this one.
it says, similar to the previous chart. We're just looking at the 10-year yield instead of the 30. Going back, almost 20 years. And as rates rise, crude oil, economically sensitive commodity, cyclical commodity that tends to rise with rates, tends to outperform gold. And that's exactly what we're seeing. And what's interesting here is they have a potential higher low in the US 10-year yield. Crude hasn't really started to outperform gold yet. So, we've both been talking about energy a lot. I recently got an email alert of a trade you're putting on, the energy trade. I mean, those energy trades have been working.
Yes.
Crude oil tried to break out earlier today. I haven't checked. I don't know if it held. It looked like a whipsaw to me, but the energy contracts are basing. They're looking good. Energy stocks are performing well, specifically the oil refiners. I brought a chart along of the crack spread. We're seeing that trend higher. I think that's constructive. But yeah, this gets back to the prior chart. Rates are rising. We're in a rising rate environment. And, commodities, specifically pro-cyclical commodities, are going to benefit from that.
So then we run in the next one, which is the dollar against the S&P 500. So the dollar is the most important input that we all use. If I'm looking at intermarket analysis or macro, I'm looking at the dollar number one. I need to see what's going on. I need to see when it's peaking. I need to see what trend it's at. If I can understand those things, I can understand most of the market. I could even tell you what the market's if somebody just told me, hey, you can't look at any of these other markets and you can only look at the dollar for the next 6 months, I feel like I'd have a good grasp of what's going on in the whole world. So if we look at it, something that's important to note, 2020, why is there that spike in the dollar? Well, I call the dollar two different things. It can be a economics, like everything's moving smoothly in the world currency, or the other thing that I like to call it is a panic currency. People panic into dollars. There's times, if you were involved in COVID and you're trading during COVID, you see a huge crash in even the bond market, and the dollar started to move a lot higher. That's where that last spike comes in. So people start putting all of their money into dollars at that point. So you panic out of all your, stocks, you panic out of all your global currencies, commodities, whatever, and you have nothing to panic into besides dollars. And then you see the other way where people panic out of them because they're going, oh, well, the market's going to start moving, so I better get into something else. So you see panic in and out of dollars all the time. This is what creates these major trends. This is what creates spikes. And so now we're looking at it here, and we're seeing that the dollar has been really heavily correlated to the market since basically since 2022. You see this huge rally in the dollar, the market's coming off as money's coming out of the market, going into dollars. You see it peaking 928, market bottomed like you nailed there at 1013. Same thing there, 1003, peaked in the dollar, 1030, bottomed in the market. This is not a coincidence. Like,
No,
this is not something
not at all.
this is not a coincidence. It's a way of telling things before they're going to happen. So take notes of these things because it's going to tell you what's going on in the market. Look back to 2020 and 2021. The market or the dollar starts getting this rounding bottom pattern here. And all of a sudden, right after it starts to break out to the upside, in 2022, the market tops. So we also see that. There's just so many ways of looking at it. So I love this chart for so many reasons.
Yeah, I think one of the big takeaways from that chart is that the dollar can go sideways like it did in 2019, and stocks can do well. Or like you're pointing out in 2021, late 2020 into the first half of 2021, the dollar carved out a bottom. Stocks did really well. Right. And so in even over the last year or so, you can see that dollars been chopping sideways. S&P 500 recently hit a new all-time high. So sideways is fine for the dollar. Now, if the dollar starts to catch higher, if it starts to break out from this consolidation and resolve to the upside, then maybe we see some trouble for risk assets in the form of stocks. And this is that level here, roughly 105. It's a zone. I think if it's above 105 and it's ripping and it's taking out last year's highs, then
we're in some trouble.
Yeah, I think we're getting towards the tail end of the current rally.
Yeah, no, that's some trouble coming in, and right here, but what I like that you pulled up here, the divergence between it as well is kind of telling something too, where it's having trouble really getting into a very bullish regime where it can. I'm not saying it can't. I'm saying that it's having trouble getting there, but also if it starts to break down, that bodes very well for the market in general, and especially commodities. Commodities are so tightly correlated to the dollar. People always talk about, well, what creates the dollar cycle, Jason? The commodity cycle, Jason. Commodity cycle is completely driven by US dollars, like completely. If you are looking at any of the commodity cycles in history, the dollar is one of the most important pieces of it. Yes, there will be periods where the dollar will go up and commodities go up, most of the time that's the end of that cycle.
Mhm.
So, 2022 Q1, great example. We have the Russia-Ukraine incident happens. Every commodity in the world is blowing up to the upside, basically. I mean, that was insane.
That was.
And equities are falling every single day. And that ends up putting so much pressure on the market that we didn't come back from that until October 2022. So there's a lot of things to unwrap there, but moving into the next one, getting to crude oil futures. That's a cool chart. Did we close over that today?
I don't think we did.
Mm-hmm.
It tried. It tried. It tried to break. It broke out. Oh, was it 79.5 at one point today?
Yeah, I remember
Um,
seeing a little bit over that, but I haven't checked yet.
no, it's 78.42. Um, as of right now. The more times the level is tested, the higher the likelihood it will break. And I mean, look at all those tests of that 78.50 level.
And something to keep in mind too, which is something for you guys who are newer to trading. When you're looking at something like this and you're seeing that the market is um, trying to take out a resistance or a support zone the other direction, but a resistance zone was what we're talking about right now. You see those runs like in the early 2024 all the way up and trying to take it out. However, if you look at the next part of this, that consolidation and then the breakout. So I grade breakouts. I call them A, B, C, or D. D being the worst, C being a little bit better, meaning, D being, think about it like a football field. If I run all the way across the football field and I try to break through a wall, I'm going to be tired by the time I get there.
Mm-hmm.
If I do it in a little different way, if I just start about 10 feet from the wall and I run as fast as I can, I might have a better chance of breaking through a wall like that. So once again, now we're kind of here. We're consolidating, then we're breaking out. I'd put money on it that this breaks out. I think this one's the one where it's going to break out and start to move higher. The dollar will be the biggest factor in that. So if the dollar ends up doing something, then we'll see it. I didn't mean to move forward yet.
But yeah, you made a great point. Like, that consolidation just below the resistance level. I mean, those are buyers just sitting there absorbing all the supply around that 78.50 level, just chipping away, just chipping away. And
Yeah.
that's where, the adage comes. The more times the level is tested, the higher the likelihood it breaks. When the thing ultimately, if and when it does resolve higher, I'm looking at that 14-day RSI. I'm looking at momentum in the lower pan. I want to see that overbought reading above 70 to confirm that, the bulls are really driving prices higher with authority. Breaking through that wall, right? Like just literally knocking that wall down and not looking back.
No, I agree. And so we'll see if we get there. Once again, it's always a toss up, but this is the type of time where I would say if you are willing to catch a breakout, this is the time to catch a breakout. So if it closes above that level and really looks good, I would especially on a weekly close, buy that. Just buy it. Don't even think, just buy it.
And it's a seasonally strong period for these contracts for
Very,
energy.
very. We go over that soon too.
I didn't bring any charts, but yeah,
No,
absolutely.
I'm talking about
100%.
the thing I showed you earlier.
Oh yeah, hopefully.
Yeah. But
Um,
but yeah,
and
so the crack spread.
we're looking at the margin for refining 3 barrels of crude oil into 2 barrels of gasoline and a barrel of heating oil or diesel. And it's trending higher. It's reclaiming a shelf of former highs going back to 2018. And I think just the bigger picture is that, again, it's trending higher, and that supports demand for crude oil. So if the margin is widening, then there's more demand for the distillates,
Yes.
the crude oil products, and that's gonna help support higher prices for crude. And then we got refining stocks. We got refiners like Phillips 66, PSX.
There is so much value inside of the energy sector. It's something that we keep talking about on the channel over and over again. You know, you brought up the trade today. You know, we continue to see these things picking up. And the only way to explain it is that we're going to run into a new regime. That's
Hmm.
going to happen soon. It's not going to happen like, you know, tomorrow, but it's going to happen in the next few months. So I don't know if this regime is going to be like, okay, well, just tech forever. That doesn't make any sense. Uh,
Hmm.
but what does make sense is maybe inflation starts to take off a little bit more. Maybe these things like the refiners, the explorers, whatever in these sectors start to do really well. I like this pick. This is a really good one. This is something that look at the relative strength. Like you can learn a lot just by looking at a stock and seeing the relative strength to the sector and the S&P 500. To the sector right now, this is where you want to be. This is telling you that if you want to be in large cap energy, you're going to really want to be in PSX. So really like this. Really like the trade. There's a subscriber on this who actually he works for them and he always talks about that stock too. So he'll be psyched on this one.
Nice, nice. Yeah, you know, when I nail it down and there's a particular industry group or a particular sector that I know I want to go out and find the strongest names, that's when I look at a particular stock versus the sector like PSX relative to XLE.
Yeah,
Because you just want to own the strongest,
yeah.
right? Own the strongest, short the weakest. And I mean, this one's still pretty close to the breakout level or risk level around 141. So yeah, this is a great looking stock.
So
Had to do it. I had to do
yes.
it.
Ooh,
I had to do it.
it's painful. Painful to watch. It's painful to watch, man. It's so natural gas, man. You know, people call it the widowmaker trade. I just think most
Yes.
people trade it way too big. I don't think it's a widowmaker trade. I think it's a great trading product. However, it has more volatility than just about anything out there besides possibly Bitcoin. And because of that, you have to trade very small. And they do
Hmm.
make minis and
They
micros.
do. No,
And
they do.
so like you can find natural gas in very small contracts so you can trade it smaller, but nobody does that. Everybody thinks they're going to trade it the same size as everything else. And then they're like, oh my God, I lost everything in trading natural gas. It's like I
Yeah.
get it. It's how it goes. So absolutely love the natural gas. I think it's a really good trading tool. And I think everybody should have in their portfolio because it's got such a low correlation to anything on earth.
Hmm.
But everybody trades it too big.
That's a great point. You know, my alarm just went off. I'm gonna go have run and grab my kid from school.
Yeah.
Before I go, hopefully we can jump back on and run through some more of these charts the next day or so. But before I go, natural gas futures, I'm gonna make a call. We see the low, we see the bottom sometime in the next 30 days or so.
Ooh. Okay. I like.
Sometime in the next 30 days, we're gonna see the low, but bottom pane, we have the monthly
Oops.
MACD. You know, even if we do see the low in the next, let's say, next 30 days, you know, it might not. It still doesn't mean it's time to step in and trade. I think we can wait until we get a crossover there on the monthly, and you can see, you know, going back 20 plus years, it's not a bad signal.
No, I don't think so either. So let's plan on getting together in the next couple days. We'll put another part of this out. So we'll just make this a two-part series with me and Ian. Ian, have a good one. Go get your kid, and we'll see you soon, man.
Always a pleasure. Have a good one.
All right, man. You too.